Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you've joined us for the Small Cap Growth Conference. Our last presentation of the day is from Aluula Composites. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I am very pleased to welcome Sage Berryman, President and Chief Executive Officer of Aluula Composites, which trades on the OTCQB venture market under the symbol AUUAF, and on TSXV under the symbol AUUA. Welcome, Sage.
Thank you, Lily. Thank you for the intro. Thank you, everybody, for joining today. It's great to have a chance to tell the Aluula story, and I look forward to the opportunity to answer your questions as well. So let's get started. The first slide, of course, the most interesting one of the deck, the standard forward-looking disclaimer, as we are a public company, and ensuring that I will be providing some forward-looking opinions through this presentation. Aluula is a very interesting company. I've been with the business for 2 years, and of course I'm a little bit biased, but it's quite exciting because we're really pushing some transformations in the textile industry. As a high-performing company, what we've done is created intellectual property that really crosses that line between high-performing and sustainable. And it's rare for a product to have both. And with that, Aluula is really pushing a bit of a shift in this textile space, as customers really do desire that high performance and sustainability at the same time. It's an exciting time for the business, as I noted. Really, we sold our first commercial product to outside customers in 2023, so we're still pretty young. But in that time, we've shown some really great growth. Q4, we pre-released our revenue at 2.9 million, and that was a 71% growth quarter over quarter. What we found in that fourth quarter is that we were 100% utilized in our capacity, so fully booked and not able to produce any more materials. That was really pushing things to our limit. Even with that peak capacity and pushing for growth as a young business, we're still able to generate gross margins in that 40 to 45% range. And that comes from fantastic customer relationships. We have great brands that we're partnered with who bring amazing products to market. That also helps the revenue be reoccurring for us. But the challenge that our brands have right now is that because of this capacity constraint, they're having to wait between 6 and 9 months to get products in order to help their product development. So that is something we're going to work on actively addressing, and I'll talk to it a little bit more today, because it is resulting in binding open sales orders for us right now over $6 million, and that's coming into the first quarter of fiscal 26. The market we're going after is the advanced composites market. And globally, this market is worth about $60 billion. So it's a very large and well-established market. What makes up that market in the advanced composite space? Really, the desire for more companies as they're building products is to find things that are higher performing with less weight. So how do you find that balance of increasing the performance of a product while also decreasing its weight? And then the other component that you lay on top of that is that customers are desiring recyclability, sustainability, longer life cycles, and the ability at the end of a product's life to ensure that it can be recycled. And even the move towards full circularity. And a lot of products don't enable that, but Aluula's does, which puts us in a preferential position for this market where they desire sustainability and high performance. It's also worth noting that the market in the advanced composites is growing about a 9% CAGR. So it's a large market that's still very actively growing. So how does Aluula participate in this market? We have quite a differentiated product that is no adhesives when it's constructed. So that allows us to be a mono material that is recyclable at the end of its life. It also creates a product that is waterproof, UV resistant, and very light and very strong. It also enables something called no-soak construction, which I'll talk a little bit more when we talk about some of our partners. So the product looks like technical films around an ultra-high molecular weight polyethylene core. And we can shift this and customize it based on what our customers need. So that becomes really important. Whether they want waterproofness or gas barrier, we can adjust it and customize for their needs. As I spoke about before, that combination of sustainability and high performance is really key for our customers, and it also creates a bit of a moat. So in the competitive landscape, we don't yet see other customers that are offering products that are as high performing and sustainable at the same time. So for us, we need to ensure that we build out our intellectual property portfolio around this area. So that means addressing things like construction techniques and how our product is created, the process itself, where we have strong IP, and continuing to work with our brand partners where they do value that high performance in combination with the sustainability. So our product range, it goes across fairly large applications, but we sell it by weight. So our product categories, you can see on the left-hand side of your screen, start at the lightest, and that's about a 25 gram per square meter product. And then as you travel over to the right, you get up to that 220 grams. So if you were preferring a product that offered more abrasion resistance or a little bit more strength and durability, you would go for that heavier weight material. And if you were looking for something that was very light and still durable, but really prioritizing that lightness, you'd go on the other end of the spectrum. So again, our SKU range offers an ability to provide our customers with a variety of different products to meet their product needs that they're developing and bring to market. Because remember, we sell rolled goods, and it's our brand partners that put those rolled goods into their products themselves that they bring to market. This gives a good visual of being able to kind of explain how Aluula as a rolled good or a textile is being built into our customers' products. So you see a variety of different uses. And one of the key things that's interesting with Aluula's material is that we are an ingredient brand, right? So we're working with partners. They will put an Aluula hang tag onto their product. But our product is quite visible within their product, so it's not hidden. It's very unique in that it has a different aesthetic, a unique hand feel. And our brand partners value that when they're building products that want to be seen as different. And again, really driven by that performance characterization. So when we partner with our brands, they are really engaged with us on understanding how that product is going to improve their product performance as well. The current markets that we're focused in, and we've spoken to this, priority one has been the performance outdoor category. So this is the first market that we entered when we came to the markets. 2023, we started selling to other wind sports brands. We've expanded the wind category to include sailing. Bags and packs. So we've got some great brands, and a lot of the photos that you've seen today represent those brands' photos of using Aluula materials in their packs. And we're starting to find more customers looking at footwear, apparel, et cetera, with Aluula materials as well. So we broadly categorize that as performance outdoor. The other category that we are just building into now is commercial and industrial. And this is a very interesting category for Aluula because our material and its high-performing characteristics are very valued by the customers here. So they're allowing applications that weren't previously accessible because of Aluula's material and the strength and the weight. And again, the ability to weld seams. So if you can remove sewing from a product, and a lot of points that used to be a weak point, it now becomes a position of strength. And this is something that our brand partners are starting to value more and more. As I said before, we've got some great partners. We've been very fortunate as a small company to have really strong inbound interest and to be able to establish relationships with some of the global leading brands in the areas that they participate in. This slide is a small example of the companies that we work with. These are the companies that have spoken about their relationship with Aluula publicly. That enables us to do so. But there's a number of others in our portfolio, in our sales pipeline, that we're not able to speak about because they're still in that development stage. So if you look at the bottom of the funnel, that's a very important stage when they're just receiving their initial sample materials and they're starting to build for field testing. So they'll build smaller units. And then they'll move up. So most of the logos that you saw previously would have been in stage 4. So they would have already launched their product. But we have a lot of demand that is building it with other high quality brands that are still in that testing phase. There's a bit of a limiter with our capacity issues that we're having right now to be able to move these customers through the pipeline. Imagine if you're a brand and you're really excited about working with a material. We agree that we would be great working together, and yet we can't get you your product for 6 to 9 months. So that's going to delay your ability to do your testing. So as we look at funding the business going forward, we do want to make sure that we have the ability to stock some finished goods inventory, which we haven't done previously. We do just-in-time manufacturing, but moving through this pipeline with a little bit more expediency will be quite helpful for our brand partners as well. Even with that capacity constraint, we are still seeing some very strong growth in numbers in the business. As I noted earlier, we did a record quarter in Q4 at 2.9 million revenue, and still saw gross margins within the 40 to 45% guided range that we've spoken to before. Q4 came on the back of another record quarter, which was Q3's number at 2.2 million. And when we look at our full year 2025 numbers, that brings our revenue to about 7.9 million. So again, strong growth at the early stage of a business with strong demand, which is leading us to trying to work through our ability to increase our capacity. We've also spoken to the fact that our binding sales orders are increasing. So we are seeing on average about $3 million of open sales orders as we close out a quarter. But we also denoted in our shareholders letter that we distributed in December that at that point for the full year, we were sitting on about over $6 million in binding orders. And again, that was just going into the start of our current calendar year. Most of this is driven by, as we looked at that sales pipeline previously, the increase of new customers coming into the pipeline, as well as current customers increasing the sizes of their orders over time. So for us, it's really important to establish that long-term relationship with our brand partners. Some of them may have only launched their first Aluula product because we're so young, but we want to ensure that that's a great experience and that's received well by the market, which a lot of them have been. And then we want to grow that relationship over time. We also want to make sure that we're bringing new customers and new types of customers into that pipeline because we have multiple different industries that we can service with our product. Management brings in some very strong operational rigor, and we've been doing this over the couple of years that I've been involved with the business. We really want to ensure that we keep OPEX as flat as possible as we grow. This is a very capital efficient business. So as we look to expand and build out the infrastructure to expand our capacity, we also want to make sure that we're keeping our OPEX low as a percent total of revenue, because that's going to help drive profitability for the business overall. And you can see the trends advancing in that way for how we are managing the business from an OPEX perspective. So I've spoken a lot about the need for additional capacity. So what are we doing? We spoke about it, as I noted in the shareholder letter, that we do want to find a path, and management's been working to build that path out to help expand that capacity. And we will come forward to the board with a recommendation. We are planning to look at adding on an additional new manufacturing facility, which would help us build 1.5 meter product, which is the industry standard. And we've been speaking to the markets and our customers about this for quite a while. Our customers are quite eager to have that 1.5 meter. It makes their manufacturing process more efficient, so it's important for them in our growth. It's also important for us to be able to expand to hit those sales demands that we have booked from customers currently. So we've put together an operational plan that we will bring to the board for approval that looks at this new facility. And we're planning for that new facility to give us a 10x increase in our current capacity. So lots of room for us to grow into. Again, it's a very capital efficient business, so that won't be costly for us to do. We also know that we require some working capital as our business continues to grow. And with this, we talked in that shareholders letter to the fact that we would be exploring a potential equity raise in early 2026, which will help fund this capacity development as well as the working capital. And then I think we spoke about the stocking of finished goods SKUs. As we bring this new capacity online, then our commercial team is going to have the fun, because they've had to have their foot on the brake to date. They're going to have the fun of being able to fill that capacity. If you look at our financials historically, we've spent very little on sales and marketing to date because we don't want to push until we have the ability to satisfy that customer demand. So once we have that capacity, we'll give the sales team a little bit more funding and budget to be able to go utilize that. And then One thing that I haven't spoken about too much today is our R&D, or our technology portfolio development. So it's a very important aspect of the value that we're creating. Having that intellectual property that is really innovative and driving that high performance material is key. One of the examples of this is a product that we spoke about in our Q3 results, that we have an early proof of concept for a waterproof breathable. Our team continues to work on that, and if and when the board does take a decision on an equity raise, some of that funding would also help accelerate some of this new product development, as well as our current products as well. Our R&D team does split their time of looking at new products, but also focusing on optimization of our current manufacturing techniques. So they've been really key as we evolve our manufacturing process to be more mature, giving us better quality, consistency, and larger batches as well. Fairly clean cap table. We're still very tightly held with about 45% insider ownership. Our fully diluted shares at about 30 million, and our total shares outstanding about 26 million, bringing our market cap, Canadian dollars, I should say, around 100 million in that size, fluctuating a little bit. And as I noted, that insider ownership is really tightly held between our board and directors and management team. Our two early founders are still part of the board of directors, which is fantastic to maintain that insider support as the business continues to grow. I realize I probably spoke very quickly, as I tend to do, but thank you all very much for taking the time to listen to the Aluula story, and it's great to see that there's a number of questions here. So what I'll probably do is put this slide on while I see if I can multitask and read through some of your questions here. Thank you so much for sending these in. Okay, let's see. Yeah, so the first question, you mentioned that Aluula is currently operating at full production capacity. Could you share the plan for expanding manufacturing and improving production capabilities in 2026 and 2027? Thank you for that question. Yeah, as I noted, that's our top priority, honestly, right now. And we've been putting an operational plan in over the last few months. It's quite detailed. And we've been looking at different spaces and looking at the equipment that's needed, and actually to the point where we're negotiating on both of those things. We're ready to go. And what we need to do, of course, is, as I spoke about earlier, potentially raise some capital to support this. So the plan is well underway, and I think for the business, we're ready to go. It's just going to take some time to execute once we get those funds in hand. So project plan well underway, increasing the size, giving us that 10x ability from a manufacturing perspective, and then the implementation and execution of that would happen as soon as we had the funding to be able to do so. How should investors contact you? The last slide that I showed has the investor relations email, so ir@aluula.com. You can always go to our website. There's a number of different ways to contact us through the website, and would look forward to hearing from you. So any way that works for you. Okay, so of the 6 million binding purchase orders for 26, what is must ship contracted volume versus more flexible take or pay? So we have, all of those are legally binding, so those are firm orders. Some of them, about 5 million of that is ASAP. So those customers would like those products as quickly as possible. And then just over 1 million of that is spread out through some, so they've pre-planned as to when that volume is going to be needed and push that through the fiscal year. So you'll hear that we spoke about that $6 million as our binding orders on hand right now for this fiscal year. Again, 5 million of that would be taken as quickly as possible at the customer's preference, and the remainder, just in excess of 1 million, would be spread out over the next couple of months. Given the strong growth, but the need for fresh capital, what is a reasonable way for investors to think about the trade-off between near-term dilution and reaching a scale where you can self-fund for growth? Again, a very good question. Thank you for that. I think a good way to look at it is to look at our historical performance. And if you look at the top-line revenue growth that we've been showing, again, without proactive sales and marketing efforts, you look at the gross margin we're delivering, and then you go back to that focus on OPEX. you can see that the business is probably not far from profitability. So when I spoke about the real value that we're building for shareholders as being three core components, one is that core business, top line revenue growth, good margins, a very operational focus. The second is a premium product with a premium brand, very key. And then the third being that technology and IP portfolio. Those three things come together to really drive the value of what Aluula is building from an asset base. So when I think of dilution, I think of that dilution coming in potentially from an equity raise near term, and really 2026 being a build year, right? It's going to have an impact on margins as we stretch our team and build out another facility and still deliver on the orders that we have on hand, and we'll be running those in parallel. So 2026, consider it a build year. But then when you look forward and you consider we would be entering 2027 with that capacity online, that's when you really start to see the ramp for Aluula. And we're quite excited about that period because I think we should be able to be self-sustaining. My hope is that this is a one-time capital raise for the business. But if you look at the growth we are driving and the margins that we're able to do it with, I think you can see a very strong future from a financial performance perspective as well. And then, of course, underpinned by those three core areas that I spoke about as driving the overall asset value for Aluula. Oh, lost my spot here. Okay. A question around the ingredient brand strategy. What does it look like at scale? Is it powerful from a pricing and long-term margin? It's a very good question. It's a very strong strategy for us, but it really depends on reciprocity and collaboration, right? We have to be equally valuable to our brand partners as they are to us. So I speak a lot about the fact that we are delivering a high performance product that does come with a premium price. These are expensive products. And in these categories that we play in, having a quality product that is at the top of its price category has to be backed up by that performance. And so when we work with our brand partners, we always understand in day one that that has to be with reciprocity. They have to benefit and we have to benefit. And I think the long run, the consumers benefit, right? You're having access to these higher performing products that have existed previously. But in order for that ingredient brand strategy to work effectively, we have to be mindful of that going in. And for a lot of these very large companies that we're working with, they're not used to working with companies that are of our size, right? Young, nimble, really driving that aggressive growth. So the understanding of mutual benefit out the gate and how we interact with each other on a regular basis is very important. And I think this will continue to drive value for our brand partners and for ourselves and our shareholders too. But as a team, we're always very mindful of that. It is a very collaborative process. And it also means that we have to be very selective, as they are with us. We have to be very selective at making sure that we select the right brand partners to work with. You know, they have lots of choices they can make for materials. And we have to make those similar choices to make sure that we're aligned with companies that are really innovative, that are creative, that have that technical expertise to work with our material, because our material is different. And they have to value that high performing aspect. So again, very important. We put top priority on this. Okay. How long will it take to get this new production facility operational? Good question. I've spoken to it before, but patience isn't a virtue I have lots of. I work on it actively, but our current plan is that it would be about 6 months. So as I said, we've done a lot of pre-work. We have the operational plans building. We're building out the production team, expanding it in advance so we can train and get employees online as quickly as possible. But the reality is things always come up, right? We'll be leasing space and putting new equipment into that space. So we're planning for about 6 months. In our revenue forecast, which we don't guide from a market perspective, we aren't anticipating impact in revenue from that new facility during the 2026 year. Again, as I spoke about earlier, where we start to see that value really coming in is as we move into 2027, but 2026 being a build year. So yes, we anticipate 6 months, hopefully faster. But again, that's in our hands to get all the pieces in place in advance and be ready to go as soon as we have those funds on hand. Today, Aluula's sales appear to be primarily consumer-driven, with a Buy Canada policy gaining momentum. Do you see opportunities to expand into government and public sector procurement in the future? Yes, absolutely. Still with an ingredient brand approach. So we spoke about commercial and industrial applications being one of the core areas that we're pursuing. Defense within that is a very important area for Aluula. Aluula's materials perform very well in the cold. So because it's a polyethylene product, they don't get that brittle state until about minus 80 to 100 degrees Celsius. So in an Arctic environment, as an example, having a material that performs very well in those cold temperatures is essential. Well, you also have a product that can be repaired in field, is super light, is super strong. If it rips, it doesn't propagate, etc. So we are a Canadian company and we are built in Canada and we are dual use. So we kind of hit all of the criteria. I spoke in the shareholders letter about pursuing non-dilutive funding. We will continue to do this. And then from a customer perspective, we look at the defense category kind of two ways, top down and bottom up. So we will speak to the governments themselves and help set specs for materials like ours that enable fuel savings because they're lighter, that enable recyclability end of life, because a lot of people still don't know about us. So we want to help spread the word so they can help set that into the specs and the requirements. Then we're also going to speak to the customers that are currently selling materials to those defense contracts. So they're pretty easily identifiable given that that's public information. And we want to be talking to anyone and everyone who's selling shelters or soldier systems, wearables, boots, gloves, apparel, etc., into these applications. So particularly associated with Arctic sovereignty, this is absolutely an area of priority for us and will continue to be as we grow. Just trying to read through here. Now that you're also trading on the OTCQB under AUUAF, have you seen any measurable impact on liquidity, U.S. investor interest, or valuation, and how will you build on this cross-listing? Great question. Yeah, we came public through an RTO, and that always has some complexities with it, or a SPAC if you're American. Over the last 6 to 9 months, we've just started to come out and tell our story a little bit. So our access to the capital markets has been pretty limited. This is why it's important to do meetings like this one that we're doing today. We do find that within the American investor base, our story really does resonate. So we've been very fortunate to bring some fantastic US investors into the story. And there has been an uptick in some of the volume that we did on a daily basis with the OTCQB listing. So I'd say our US investor base is definitely growing, and it is definitely a priority for us. We are Canadian, we're proudly Canadian, and we've got a strong Canadian holding. We also have good international holdings. So I think for us as a business, as we continue to grow, and as we get out there and tell our story a little bit more, yes, the US market is absolutely a priority. And a lot of our customer base is there too. So I think those go hand in hand. Your fabric was just on the winning IMOCA boat in a major offshore race. Someone's right up on the news because that came out this morning. So yes, absolutely. How does that type of performance proof translate into concrete revenue opportunities in sailing and marine over the next 1 to 3 years? Very good question. And I think the real key for us is to remember that we are selling a premium product and it has to perform. So the more examples that we can have of real customers using the product in real world scenarios and sharing how it was that it impacted the performance, I think it's helpful for everybody. You know, our product is different, and I've talked about it before. The ability to move to a no-sew construction, welded seams, the hand feel, the look, the sound, the aesthetic of the material is very different. And you don't change industries with incremental innovation, right? This is a big shift. And I think the example that we saw in sailing and that article that came out today is a great example of that. The more that we can have real users sharing that real user experience, the more other people are going to understand and want to test it. We don't give revenue guidance, so I won't give a anticipated impact in the saline space, but saline is an industry that we absolutely prioritize under the wind category that we started in. And I think the saline opportunity is a big one for the company. And we hope that we get more differentiated kites and wings and spinnakers onto vessels like that. They're a great group to work with, and yeah, we look forward to more of it. Thank you. Some lovely comments. It's great to see this engagement. It's fantastic. I probably have time for about one more. What are the top 2 or 3 things you hope investors take away from your presentation? Aluula's offering a different solution in a time that the industry needs it. PFAS-free, no forever chemicals, recyclable, and high performance. And I think we're in a unique time where the market is recognizing that and asking for that in our product. And also we've got the management team to back it up. So it's an exciting time. We really appreciate you guys joining today and spending the time to listen and to ask the questions. Please don't hesitate to reach out. As I said, go through our website. There's lots of information there. Thank you, everyone. Really appreciate it.